guys, it's October the 12th, and we have some FOMC minutes that are coming out today. We'll see if that affects the markets at all, but it'll be at 2 o'clock. Historically, that has been a thing. So it'll be very interesting to see what's up. I'm going to actually talk about Pepsi, which reported a fantastic quarter. I mean, I looked through those numbers, and there's only one possible thing I think might beat it. I'm not convinced that I'm right, though. So let me just show you what I'm seeing, and then you guys can make your own call on it. Share my screen. Past performance is not indicative of future returns. Okay, so first the market, just for the setting. We've been bouncing all around, but mostly on the positive side this morning on the indices. The Russell finally trading down. Really interesting how the Russell's been performing, but there are some names within the Russell that even I want to do a lot more research on. So it's kind of a spotty thing. I still am saying that picking stocks probably will make more sense going forward here, because there are going to be some companies that people are going to want to have ownership of that have traded down to valuations that don't make any sense. FinViz, if you look at this, you can kind of see it's a very mixed tape. Very mixed tape. And I mean, some things were down a lot. Tesla down a lot this morning, recovering already to only be down 28 basis points. Netflix all over the map this morning, recovering back up to the 222 level. I mean, it's really a seesaw whipping you around for the first 2 hours of the morning. It always has been that way, but wow, there's a lot of extra now, more than any other time. That's why I think fundamental analysts really have a shot, because this market is giving crazy opportunities in weakness as people just sell out assets to raise capital. Because I think what's really happening is you have a lot of managers just going to cash on the off chance you get a real sell-off that's very aggressive. And whether or not we're going to get that because of the composition of the indices is a really good question mark to be had. Okay. Let's go into a couple other things. CPI is tomorrow. You know, everybody's so bearish the CPI number, which means that this thing could flip on a dime if it's better than expected. And I gotta say, it's really interesting to me how aggressively negative people are, given that we're actually up against the beginning of an easier comp in last year's numbers. Because, you know, you got to remember, oil went from 30 to like 80 last year, and then we released reserves in September, October. So it really depends on how they market, how they're marking it, what the inflation differential is going to look like now that oil is back where it was, literally the exact same price almost from last year. So I'm really, really surprised on what I'm seeing in the bearish sentiment of it. I think cosmetically, you got a shot that this thing flips on you, in which case you want to really be thoughtful about what you want to short and long, or alternatively, just go to cash and don't play games. Now, let's actually talk a bit more about Pepsi. That was a really, really clean quarter. I mean, there's almost nothing that I can say in these numbers that were a problem. You know, we've got top line growth of almost 9%, gross margins up 9.7%, which means that they actually made it on cost of goods sold. That's crazy. I have an idea of, like, I have a hypothesis, but I'm not convinced that I'm right because I can't find it in the numbers. Operating income up 6.1%, EPS up 21%. So it's interesting that below the line stuff between operating profit, and so they made a bid on gross margins, but then they had a little bit higher operating stuff that was going on. Let's call it that. And then on the EPS line, they made it because of net interest expenses. They made 100 million off of that. And then 400 million came from lower income taxes. Very interesting. I want to kind of talk about the mix of revenue and net income. Latin America, very strong. And the FX fluctuation, minimal for them in LATAM. So, you know, that really, really fantastic. Volumes were really strong in Latin America. And I have talked about the fact that we are just, the world is way too bearish. They're throwing in all emerging markets together. And it's really not all emerging markets. It's emerging Africa and emerging Europe that really is having a problem. I am actually in total agreement that I'm seeing a different picture within Southeast Asia. And I'll try to figure out what statistics I can actually use as relates to food price increases, et cetera, because some of them are just not showing a picture that makes sense. But here, Latin America was still very strong for them and continues to be strong. The North American market was actually also very strong, and it wasn't done in some crazy, yes, they got pricing through, but they say they got most of it in costs. And I think what it was, let me keep going here. Is that it? No. Okay, so it's really those two slides. And I didn't prep the other slide that I wanted to, but the one thing that might be what happened was they did shut down all of their Russia, Ukraine, that entire conflict zones operations. And I almost wonder if what we're actually seeing is all of that stuff that they purchased brought into Europe to try to manage Europe. Because the crazy thing is Europe did have a down 3. Most of that was due to FX. If it was not for FX, 12% would have been what you got from Europe. And realize this 4.5 is the divestitures of a couple of different properties that they had in Europe. Now, it's not the only divestiture. It's not even the biggest divestiture, quite frankly, because, but nonetheless, they did get a little bit smaller in Europe. But I almost really wonder if they took that inventory that they had set aside for the volume there and brought it to Europe, because we do have much lower volume in both convenient foods and packaging. And so that gap differential, which showed Europe contributing 7% with the other parts of the business contributing like double digits, especially in the case of Latin America. I wonder if that's how they actually made it through the quarter. Now, on valuation and whether or not this carries into Coca-Cola is tough. If my hypothesis, which they did not talk about in the call, but it's just, I'm getting it from looking at the write-downs that they took, which is almost $1 billion in Russia, and then trying to figure out anything that would have allowed them to show this type of situation. Because certainly, I mean, they've gotten a little bit of a benefit from some of the raw material cost reduction on packaging side, but Europe hasn't felt that at all. If we're really honest, Europe is suffering on every single possible raw material. The US is a little bit better by quite a lot because we've just decided that we're going to slow growth down like crazy. And so, there are some things that are happening. The only other thing I could think of is that they're managing supply chain in a particular way, because as we've mentioned, Asia has a very, very particular mix of what's going on there, such that they're not experiencing inflation at all. And since this is a global company, it's just, I don't know what's going on here, but I will say this. We will hopefully hear a little bit more from Coke when they report next week. Between the two, does Pepsi deserve to be up 4%? I'm going to say yes. It's trading at 15 times. It's growing. I think it's guiding towards 7%, which they're saying is conservative because you still don't know what's going to happen across the globe. They feel like they still have more benefit on the operating side, et cetera. Now, remember, again, like I said, they made a lot of this below the line via divestitures and net income, some net income charges that last year versus this year. But at 15 times enterprise value in EBITDA versus EBITDA before the quarter, because this takes a day or so, you are just a touch over your peg for a staples company going into kind of an odd period. Coca-Cola does trade at a higher multiple, and we shall see what they do next week. But this is really fascinating to me, and it really articulates the fact that each company is going into this year in a very different strategic place. Hence why I keep saying that we may be entering very much so truly a stock picker's market. And with that, I'll go ahead and stop sharing, keep this fairly short. Any questions?
Yeah, May, thank you. Pepsi, they sell small like snacks, right? And Cokes.
Yeah, their beverage business is a little bit under half. Then they've got Quaker Oats, Frito-Lay, and the whole host of other snack foods that no one in the US was probably heard of. But if you travel international, these are like beloved brands in the local markets.
Right. So
bottling company itself is separated out. So that might be part of why packaging isn't impacting them quite the same way. Still, it's not like it's a zero cost because there is some pass through.
Yeah, I would think they are very able to pass their costs on.
Yeah, they are. They really are. And it's interesting because they said that there's a number of different episodes that you'll see on CNBC, which, I'm not always a fan of, but in this case, it's directly the CEO talking about the way that they manage optimized packaging is what the wonderful consultants like to call it. But it's essentially in different environments, people like to buy different size product. So maybe if you were accustomed to buying single serve, now you're buying the bigger bags, but it's still the case that, you can only eat so much. So I don't know if there's stockpiling going on. I don't know what is going on, but even the beverage business, just pure soda, did okay. Now they did exit they have some dairy business that they do in Europe. They exited out of that in the quarter. So some of the ones where you really are very dependent, you couldn't necessarily store that product or use timing from inventory to like manage it. Those businesses are largely speaking gone. So, they probably own, that's why I'm saying, is it possible that they benefited from moving all that inventory that would have been marked in February across and over, or I don't know what they did to get it done.
I bet they're able. I'm sure they have healthy drinks also, right?
Oh, they have Gatorade.
Okay. Well,
Yeah, and they did actually talk extensively about Gatorade. Gatorade's doing really well. Some of the new flavors, some of the new brands, and some of the new things that they're doing with athletics there. That was fairly, but it's not like they have, yeah. Mostly soda.
Well,
Sorry, it is mostly soda. It's mostly soda, oatmeal. Like, do you know what I mean? It's whatever they're making out of, which I think is corn.
They own Frito-Lay, right? They
Frito-Lay, so potatoes. Actually, maybe it's because potato and corn prices are definitely going up. Maybe potato prices. Let's see, Lamb Weston is running a better business there, and they did say the crop showed some alleviation. And honestly, potatoes aren't going to be as affected and impacted by, that's not where potato isn't one of the top things grown. Let's call it that way. It's not grown because you can literally grow potatoes anywhere, depending on what you're trying to do. Strange. It's impressive though. Can you imagine? I was shocked. Up 9 and then up 20.
Long term, that's better than Apple, I think.
You got it. Like, as much as I hate to give Staples love, so far, you've got some really strong operators in those businesses right this minute. I think they got clobbed. If the issue is supply chain, so much management transition happened during just COVID, that period, to focus on supply chain management. I don't know. And it's really fascinating. I couldn't find anything sketchy at all or any story to latch onto to let me understand why that business is just doing so well. He's not upgrading anything. He's not trying to force people to buy any kind of product. He swears he has not reduced the size of a potato chip or the count in a bag, which was really, you know what I mean? Like these are all real things they can do, right?
Potato chips.
Right? Yeah, just eat one, apparently.
Okay. So their PE, I've got it at like 25. Is that pretty normal for that industry, or?
No, I think you've got an overstated. Is that trailing that you have?
Okay.
Is it PEP that you're looking at? I'm showing the forward P. Yeah, so it should be now with the new numbers closer to 22. It's a high multiple on earnings, but realize that they do have a fair amount of cash basically. So when you do enterprise value to EBIT, and also there's always a few funky things on depreciation, amortization, plus some of the weird charges they took. So if you do enterprise value to EBITDA, which will be for them a cleaner number, it's closer to 15 times. So between debt and cash, between the depreciation amortization that they take, because they absolutely do have a lot of DNA, you actually get a little bit of a different number. Weird. I don't know.
No, I'm glad you brought this. This is, for this type of market, this is a really good stock.
It's not bad. Yeah. Yeah. And their dividend, let me actually look, because maybe I don't think it's the highest dividend because it's still a staple. And so they're not really, It's not really, yeah, you know what? You're still getting almost a 3%, 2.8% dividend yield. So it's not, that's still, I think, higher than the S&P average, which is going to be, I think, well, actually I have to look now because things have changed so much, but I think it's closer to 2.25. So you're getting slightly above. Let me just double check this. There's no reason to guess.
But they have the cash to expand out of junk
One and
food,
a half.
right?
What's that?
They have the cash to expand out of junk food.
I don't know that that's, so the snack business.
There's
We don't
lots
call
of
it junk food anymore.
oh,
The
it's called
millennials
snack.
are so sensitive. The millennials and Gen Zers, us Gen Xers, we're like, call it what it is. It's junk food, but they're, because it's now like, you know, it has more wholesome like
Okay, snack food, snacks.
snack
Yeah,
food.
that's what I tell my kids. Snacks, right? It's not junk food. Right.
Yeah, and you know how they're marketing snack food these days. There's all these like, oh, this is actually a healthy snack sort of thing going on. So I think in fairness to Pepsi and the other snack food businesses. Yeah, but you know what? Actually, S&P is at 1.5% dividend yield currently. And then they're at almost 3. So you do get almost, you know, you get almost a double dividend yield off of Pepsi. If you know, it's just, it's so weird. Yeah. In that regard, just off the dividend, if you're worried about this market, Pepsi is a solid call.
Yeah, 169. Right. Okay.
Yeah.
We will look at it.
I mean, I'm probably not going to touch it because it's not my current style.
I understand, but from an
But
investor,
if you're an investor, yeah, legitimately, if you're an investor, you've got a horizon of 5 to 10 years, getting a 2.8% dividend yield off of a company that's showing growth in the worst environment
right?
is a solid call. Plus, it'll diversify you away from probably what is a lot of tech holdings for the majority of people. It's not a bad call to get some Pepsi if you need the diversification. Maybe give it a chance to settle in here. Do you know what I mean? But or at least monitor it around Coke, because maybe you'll have some gamesmanship around Coke's earnings calls, plus or minus, you know what I mean?
Yeah, that's a good strategy.
But still, yeah.
Okay, does
All right,
Netflix report on Friday?
I have Netflix. Let me just double check. I think it's next week, early next week. I have
Okay.
them October 18th. So I think it's like next Tuesday or something.
Okay, because we're gonna
Yeah, but
head
I
there.
think by Friday, if this market rallies in some weird way, by Friday, you do want to try to like really see if there's a hedge. It's just that with vol doing what it's doing with this FOMC and CPI, maybe do a little bit if you're, it depends on how you decide to do it. If you decide to buy puts or put spreads, I would, like, given this little reprieve that we're getting, I would try to look to do it some today, some tomorrow. And you know, if you're looking to do it via covered calls, there's a possibility vol spikes up, or if the thing moves, you might be able to get it higher. But I think doing some combination, I know that's like really unhelpful, but this market is so weird, and the timing of Netflix is just so bizarre. Like, if you know, people will say what they will, but truly, Netflix looks like it, that people have no freaking clue. Like the spread of analysts calls on this is quite wide. The volatility is quite wide. And it's not directional. Like, you know what I mean? Both the calls and the puts are showing a very particular type of uncertainty going into earnings season. So Netflix is going to, you know, it's going to move. I could be proven wrong. It may just pop up spike here at 20, 220. I don't know. But there is a lot of uncertainty surrounding Netflix.
What we've done before is wait till the day before, because there's no time value you have to pay for.
Yeah. Yeah, I feel like we're a little bit too far out, and the vol is trading so weird to do it. I mean, I'm with you on that.
Okay. Thank you so much, May.
Well,
Brilliant.
Bye.
Bye.